Thank you for joining us at xm.com for today's market comment by Marios Hadjikyriacos. I'm Maria Pashurdes. A pivotal week for global markets kicks off with another sharp spike in oil prices. The nonstop rally has seen WTI crude prices rise more than 30% this quarter, driven by a classic supply shortage after Saudi Arabia and Russia decided to curtail their production. Rising oil prices have repercussions far beyond energy markets as they simultaneously squeeze consumers and stoke inflationary pressures. In turn, this complicates life for central banks that are now faced with the risk of persistently high inflation heading into an economic slowdown. In the markets, soaring oil prices translate into bad news for the currencies of energy importing economies, most notably the Eurozone and Japan, initially through the trade channel and then by dampening economic growth. Hence, the evolution of energy prices will be crucial for the euro and yen, which are already on the ropes. Shares on Wall Street lost ground on Friday, with the tech sector leading the decline. Some analysts attribute the sell-off to the massive option expirations last week, although the steady march higher in bond yields probably played a role too. It seems stock markets have started to feel the heat of rising yields, as last week marked a rotation away from tech shares and towards value-oriented stocks, which is typical in a regime of elevated yields. And this pressure is unlikely to relent, considering that 10-year U.S. Treasury yields briefly hit their highest levels since 2007 earlier today, courtesy of rising energy prices. Over in the FX arena, the dollar took a small step back on Friday and remains on the defensive today. With U.S. yields reaching new cycle highs and equity markets on the retreat, it's surprising that the dollar could not move higher. There might be an element of caution creeping in ahead of the FOMC decision on Wednesday, keeping dollar traders on guard. Beyond the Fed, there are also central bank meetings in the United Kingdom, Switzerland, and Japan on the agenda. Hence, it will be a week packed with volatility. Finally, gold prices staged an impressive recovery on Friday, bouncing back to erase all the losses from earlier in the week and trade even higher. The fact that bullion managed to close higher on a week when the US dollar and Treasury yields climbed is a victory in itself and suggests there's real demand for gold under the surface, most likely due to central banks raising their reserves. Thanks for watching today's market comment here at xm.com.